Hello all and welcome back to the channel. All right, I got a great show for everyone this week, or at least that's the plan. So we had a bit of a sell-off last Friday, in case you forgot, and we're probably asking ourselves, is the sell-off going to continue? You know, what's next for this market? Is the bull market thesis still in play? And so, you know, these are good questions. And I'm sure a lot of us that are watching this channel right here probably got into the market in this way, probably in 2020, 2021. We remember that melt up of 2021, and then we remember feeling the pain of 2022. Is history repeating itself? Well, the short answer for that in this market for me is no. I don't think that we are repeating history. As a matter of fact, the fact we're even asking this question to me is a positive thing for the market, a positive thing for us. And so, like you might remember, like back in 2021, there was this irrational exuberance that kind of like just turned into like euphoria. And I don't see that happening this time, you know. This time I see us proceeding with caution. It's kind of what sets this rally apart from the one that we had in 2021 or the one that we even had back in 1999. We're learning, you know, things, and we're just getting better. You know, we're the people watching this channel fully aware that this market is trading at 21 times forward earnings. We know that that we're probably in the later stages of a rally, and we're due for some sort of pullback. Some might even say a healthy pullback here in the, you know, coming up here pretty soon. And I don't like any pullbacks, not even the healthy ones, but we're due for one, maybe 6, 7, 8%, who knows? And at the very least, we're due for some sort of market consolidation at a certain level before it goes higher. We know that it's going to go higher because earnings have been coming in really strong this quarter, and ultimately this market is driven by earnings, and the earnings have been good. The market goes up. Our economic data has been strong. GDP has been strong. Job growth has been strong. Unemployment rate has been good. These are all things that we know. So this data has also got the market going up. We've also got the fact that the next Fed move is most likely going to be a cut and not a rate hike. These are things that are going to keep the market going up, you know, in the medium to long term. But in the short duration, we might have a little bit of pullback. All right, so in this video, what we're going to do is we're going to talk about, you know, next Tuesday's inflation report and why I believe this market rally may or may not have legs in the short run based on this inflation report. We definitely have to talk about Nvidia because it's the like quintessential bellwether stock for this market. And I'm like super excited to talk about a new stock that I added this portfolio. And I added it, and I think that it could actually 2x or even 3 or 4x. I'm really pumped about it because you kind of look for that stock that, you know, you think is kind of small now that could get pretty big. And I think for me, this is that stock. And I have been on fire lately with stock market picks. So let's go ahead and get into this. So the U.S. Bureau of Labor Statistics is set to release its year-over-year consumer price index or inflation print this Tuesday morning, March the 12th at 8:30 a.m. And the expectation for this print is it's going to show up as 3.1% year over year inflation. Last month, it was 3.1% year over year. This month, the consensus says it's going to be 3.1%. The forecast is for 3.2%. However, it doesn't hit this 3.1%, the market is actually going to go down. Now, it's this inflation forecast or consensus forecast is why I believe the market sold off on Friday. I was expecting a market melt up because I think this number is going to be 2.9%. However, the consensus is out there saying it's going to be 3.1%. So how is it that 3.1% actually represents an acceleration in the inflation rate? Well, let me go ahead and explain that. So if we look at the year-over-year inflation right here, it's 3.1%. It's broken down into all these different categories. This number here from across this line right here represents the month-over-month inflation data. Is it going up or down? We would say that last month it went up 0.3% over December. Of this number here, you can see a lot of this inflation was in food at home and food away. Now, I would expect that month over month, this will probably come down. Doesn't mean the price of food's coming down. It just means the rate of inflation of the price of food is coming down month over month. I would expect that energy would remain fairly steady, but the one that I think is really going to bring this inflation print down is this shelter here. And if you look at the shelter, just this one line, this represents over 30% of the entire inflation data. And we can see that 0.6% is very high. 1/3 of all of the inflation comes from shelter. This would be your rents, and these would be your home prices, right? And we can see that anytime it's at 0.6 or so, that it would come well down. Like this time it came down to 0.3. It went from 0.5 to 0.3. I wouldn't expect this to remain at 0.6 month over month. I would expect this number to come down, and I would expect the food number to come down. So I'm probably more in line with what you see every single other month all across this board. This should come down. And for that, I think that the inflation is actually going to tick down from 0.3 to say 0.2 or even 0.1. But that's not what the consensus is thinking. Let me show you what they're thinking. So in order to get this inflation print, what you have to do is you just take this number and you divide it by that number. And so what you get is 309.685, and you divide that number by this one here, which is 300.356, and you get that 3.1% inflation rate that we've been talking about. Now, in order to have this remain at 3.1%, this actually has to accelerate, because see, this is a pretty steep line. And so we're expecting just as steep a line on this end. So let's multiply this number by this here, that 301.509. And what they're saying is that this number here, 309.685, should swell to 310.873 after this next inflation print. If you divide that by this month right here, 309.685, we're saying that the month over month rate of inflation has to be 0.38, or what they're going to do is round it up to 0.4. We can see that 0.4 is actually an acceleration in the month over month inflation. And so it's this acceleration of inflation that had the market coming down on Friday. We're looking at this as bad news. Now, it's my view that this is actually going to come down about 0.2 or even 0.1. Let's see what 0.2 would do to the month over month inflation print here. So if we take 309.685 and you multiply that by 1.002 and you divide that number by this one here, 301.509, now you got 2.9%. And this is what I think is going to send the market up. I don't think it's going to come in at 3.1. I think it's going to come in cooler. And I think it could even come in at 0.1%. Now, I'm going out on a limb. I mean, if the entire consensus is that inflation is accelerating, it's entirely possible that I'm just wrong. But if I'm correct, we should see 2.9% this Tuesday. Or if it comes down to 0.1%, and you divide that number by this number here, 301.509, we would bring it down month over month or year over year to 2.8%. I think 0.2 is reasonable. I think 2.8 is reasonable in this case. But again, there's got to be some reason why the consensus is that this thing is accelerating right now. But the problem is I don't know where that number is coming from. When you look at what happened last month, everything was up unexpectedly. Medical care expenses were the highest they've been in forever. The housing price came up as high as it's been in the last, 7 months here. The food is accelerated higher than it's been in all these months. Where is this increase like that going to come from when it's already the highest it's been month over month? It would, in order for us to increase again over this, it's just accelerating like crazy. And I think that's what has the market selling off. And I think that Tuesday morning is going to show up and we're going to be pleasantly surprised. I could be wrong, obviously, but I'm just saying that I think that we could see a surprise. If we don't see a surprise, let's say it remains at 3.1% and the inflation is accelerating in that way, that might be a reason that, to peak up your antenna and start thinking about maybe selling out of the market for a little bit and then coming back when things kind of stabilize. That might be what I do. Might go into short duration fixed income or something like that, because if this is not going to propel the market higher, I don't see a lot of other tailwinds between now and say like April 12th when the banks report their earnings again. But I do believe this is coming down. But if it doesn't come down, I think that the market could be in a bit of trouble in the short run. I think in the end, the long-term bull thesis is fine, but in the short run, I think we're going to be headed for some really bumpy roads. And I don't even think that the great Lord Jensen is going to be able to bail us out of this market and send it back upwards with this AI conference and expo here on March 18th through 21st, in which he's hosting. And he does this annually and he speaks at it. And usually this is going to send the price of NVIDIA up about 6% whenever he has this conference. But if we're getting this really hot inflation read, I'm not even sure that he'll be able to bail us out of this one. But, that's in the short run. We're not going to get any tailwinds until earnings start again on April 12th. And it usually starts with the big banks. But in the long run, there's a lot to be bullish about. Part of it is that people just have a lot of money right now. U.S. household wealth soars to record on booming stocks. We can see that U.S. household wealth rose to a record of roughly $156 trillion at the end of 2023, thanks to surging stock market that offset a drop in the property market. Again, it's a drop in the property market. It's not accelerating as that CPI would suggest. That number should be coming down. Household net worth rose about 3.2% in the period from October through December, from 151 trillion to 156 trillion. So people have money and they're taking this money and they're putting it in the stock market. I know this, empirically, I know this because I've done the same thing. I've moved money out of one account, I've moved it into the stock market, right? And then I'm also moving stuff out of U.S. Treasuries and I'm moving it into the stock market, at least for now, until, there's some reason, that I need to move it back into the treasuries again. The value of equities held directly or indirectly through mutual funds, life insurance policies, or retirement accounts rose by $4.7 trillion. It rose from $42.9 trillion to $47.6 trillion. And this was during the fourth quarter of 2023. People are having a lot of money. They're moving it into the market. And I'm seeing some other long-term tailwinds coming from our economic data, like this, which came out last Tuesday, that showed that the Treasury yields were falling as the ISM data showed inflationary pressures were cooling. And so what this means, this is our manufacturing index. It's showing that the cost of goods is coming down. And what this was doing was a signal to the market that the Fed is probably getting the green light to go ahead and cut interest rates. And cutting the interest rates will ultimately drive the U.S. Treasury yields down. Another thing that came in was this Friday, we noticed that we are having job growth. However, we're seeing a rise in the unemployment rate. This rise in the unemployment rate happened because there were downward revisions from the job growth that happened in January, reflecting that December didn't add as many jobs as we originally thought. It said it added 167,000 jobs rather than like 300,000 jobs. And so this also signaled to the market that the Fed might need to actually cut their interest rates to avoid a recession. What they don't want to see is this unemployment rate ticking up to unacceptably high levels. I think right now they would really love to engineer a soft landing and just completely nail this thing. And so for that reason, the interest rates came down, or the Treasury yield rates came down even more in anticipation of the Fed needing to cut interest rates. As a matter of fact, even Chair Powell came out this past week and talked to Congress, and he was very dovish, and he gave no signal to the market that he's going to be raising rates. In fact, it was just very much the opposite. He was very calming, and I don't know why I had to go on for 2 days. It probably could have wrapped up in about 30 minutes because I think he said the same thing over and over again. Nevertheless, he was a very calming influence on the markets this past week, and he's not indicating any sort of Fed rate hikes. Now, I am bullish in the long run, like I said, but I might not be as bullish in the short duration here. But even if I go into treasuries in the short run, I will not be selling out of my Novo Nordisk. I really like this stock. This is one that I've been holding for a while now, and I really like it. And they're the company that makes Ozempic and Wegovy. And what they did this past week was that they had this obesity pill that passed a trial. It showed that it was safe and it showed that it was effective as Wegovy. So now rather than having to take a shot, you simply can eat this pill and lose the weight. You can kind of see the appeal in this sort of thing. Another thing that came out of these experiments or studies here this past week was that it shows very positive effects on chronic kidney disease. A large late-stage study on Tuesday showed that Ozempic delayed progression of chronic kidney disease in diabetes patients, reducing the risk of death from that and major cardiac events by 24%. So we're showing that Ozempic is very good in chronically obese people in reducing kidney disease and cardiac events. For this reason, China has also approved Ozempic and Wegovy to come into their market. So then that's a whole lot of new customers potentially for this product. However, I guess I don't notice a lot of obese people walking around in China, but then I've never been there, and maybe they don't put them on TV. I don't know. I'm sure they're there, but again, that's another bigger market for this particular product. So I won't be letting go of this one. Even if I sell mostly out of the market, I'm hanging on to my Novo Nordisk. Now, one that I might sell out of, and not that I think it's going to go down, I just think that best case scenario, it can consolidate and then go back up, but it might effectively go down for a little bit, and that might be NVIDIA. And it's not because it's bad on NVIDIA, but what we might see is some kind of rotation out of NVIDIA and into other mega cap tech stocks such as Apple or Google. And I think we're already seeing a bit of that happening right now as Apple bottoms and then starts going back up, same with Google, and this one coming down. So it might be that we're seeing a little bit of mini rotation within the mega caps at this time, and I might just go ahead and follow suit. I already own Apple. That's another one I won't be selling it, even if the inflation rate comes in really hot on Tuesday. But I probably will be selling out of NVIDIA and just lock in my gains and come back and play NVIDIA another day. But it all remains to be seen. It's all hinges upon this Tuesday. Now, the stock that I'm really bullish on, and I just added this past week, is actually Shake Shack. Now, what happened was I was walking through Camden Town, and that's a little neighborhood in North London, and I noticed there was a Shake Shack there. And I was like, holy moly, these guys are expanding everywhere. They must have lots and lots of these Shake Shacks all over the place. So I Googled how many Shake Shacks are there. It turns out that there's 262 in the US, 141 international, and they're in US, Bahrain, China, Hong Kong, Japan, South Korea, Kuwait, Mexico, Oman, Philippines, Qatar, Saudi Arabia, Singapore, Thailand, Turkey, UAR, the United Kingdom. These guys are like all over the planet and have barely touched the US market. And that just basically made my hair on my arm. I would on my head, not on my head, but it made my hair on my arms just stand on end. I was like, 262. How many locations say are there of, I don't know, Five Guys? So I looked up how many Five Guys locations there are. There's 1,700. I'm like 1,700. If you add this all up, this is roughly 403, right? There's roughly 400 Shake Shacks. There's 1,700 Five Guys. And then I said, well, how many, if I had to look at, like, say, Shake Shack and say, what are they most like? What other stock do they remind me of? The one they remind me most of is actually Chipotle. And there's 3,400 of them. And I'm like, this is an interesting combination of growth and deliciousness, and they've already got their foot in all of these markets. Now, if you look at their menu, say over here in New York City, you can see they have some very different and unique sort of menu options here. In addition to their Shack Burger and their cheeseburger, you got Korean barbecue burger. You got this thing called the Smokestack, which is a bacon burger. You've got avocado bacon burger. You've got mushroom burgers, veggie burgers. And in addition to just burgers, they also have chicken meals, Korean style fried chicken, avocado bacon chicken. So they have some interesting menu options. As a matter of fact, I know that this would sell over here in the United Kingdom because I went to Tottenham Hotspur. One of their main players is actually from Korea, and they do have a Korean style chicken burger down in the concession stand, and it's delicious. So if I do go into a Shake Shack, I'll get me one of them. But they also offer these things at a fairly reasonable price. You can see this New York prices. A burger is $9.59, so that make it more expensive than McDonald's, about two-thirds the price of Five Guys. So I like their price point here. And I like their menu offerings, and I really like their opportunity to grow internationally and throughout the United States. Now, let's go ahead and have a look at their financials. To do that, all you have to do is you go over to their investor relations page, you look under their SEC filings, and then you pull it up. And if you look in their 8K here, this was the most current report that they had, you can see that their revenues are actually doing quite well. For the 52 weeks ended in December of 2022, it was 869 million. For the 52 weeks ended in December of 2023, it was went over the $1 billion mark. We could see that's what, about 20 to 25% growth year over year. This is outstanding. Shows that they're opening stores, and it also shows that they're starting to profit. Their profits have gone up. Their net income went from a loss of 26 million to a gain of 6 million. They went from losing 54 cents a share to gaining 50 cents a share. This company looks like it could be a winner. We come on over here to their 10K, and what I did was I looked up the risks of this company, because you kind of want to know their risks if you're going to go into a company. You want to know what you're getting yourself into. So some of their risks to their long-term success is dependent on the selection and design of their business strategies. The expansion into new markets could be a risk because you may go into a place that may not profit, but their marketing strategies may not be successful. You know, a lot of these things just don't really scare me. I think that this seems like the sort of thing that gets me kind of excited. Now, somebody asked me, they said, well, how long do you plan on holding that company for? And I'm like, you, sir, do not watch my channel, because every stock that I get only gets a pimp's love. And a pimp's love is very different from that of a square. And you can kind of see right here, and it's never been stated better than it was by Stinky Dong Man right here. And it says that a square's love is usually unconditional and often based on the object of their love, but an idealized image of them that they've conjured up. That would be a square's love. A pimp's love is extremely conditional. They give companionship and affection in exchange for generating revenue. The object of their love is not idealized. They not only see flaws and insecurities, but their business model depends on being able to recognize and respond to them. So my answer to how long will I hold on to Shake Shack is it depends. Will it continue producing for me? If it doesn't, I'll cut it loose. But right now, I think that it looks like a really good stock to get into, especially because this stock has been up 63% the past 6 months. This chart goes from the lower left to the upper right. If we look at over the past year, it's up 90% over the past year. Again, lower left to upper right. I think it's early innings. I think it's pretty much getting in on the ground floor of this one. I do believe that if they could triple or even quadruple or even 5 times the number of stores, this stock price should go up pretty accordingly. I think this is a good one to get in the ground floor. If the stock market does pull back, I will not be selling my Shake Shack, at least not in the short duration. So there you go. So even in a market correction or a pullback, I won't be selling my Novo Nordisk, my Apple, or my Shake Shack stock. I'll probably move all the rest. I'll just take my profit and move the rest into short duration treasuries, at least until this market begins to turn around sometime in the middle of April after earnings start to come in and provide some sort of tailwind. And this is all provided the inflation number disappoints this Tuesday, which I don't necessarily think it will, but if it does disappoint, that's kind of the direction that that I'm going to be headed in. So I like to thank everybody for checking out this channel. Thanks for Bob for your continued support. Thanks to, you know what? Thanks to Jack and Ted. This yesterday, I was watching international rugby, England versus Ireland, in this little pub down in London, and they reserved a table, and it was super crowded, and they let me have a seat at their table, and they were awesome people. That's one of the reasons I love England. Just fantastic people. Anyway, yeah, thanks for checking out the channel. And if you liked anything on this video, please like, subscribe, hit that little notification bell. Until then, we'll see you next time, and have a great weekend. Bye.